Good evening, everybody. It's Sunday, January 19th, and just getting the weekly plan together for ES futures. We can run through some of the levels for the week, look at the market structure, and just see what might be the key levels for this week to monitor to gauge direction and where you can pin a little entry. And we'll also look at what happened last week. So let's pull that up here. So this is the profile we had before last Sunday started. And this is the chart that I posted in that plan from last week. You can see there was a lot of sell delta way up here, pretty much to 60-60 here. And then as you can see, not last Friday, but the prior one, there was a big sell off for 3 to 4 days. And then eventually we saw price come down a bit further. So this was our plan that we had built. Let me just zoom out here to fit slide. And that was the big gap that was down here that I highlighted. Basically, this was an expansion of that prior week to negative 1.118. And that lined up perfectly with that November 5th election gap in. And here's just a chart of what happened as the price descended a bit lower past that weekly low. And once that happened, the sellers continued to push basically the stops of the buyers right down to that gap, and I had an asterisk here. So we went from that one that which we started. We said it could go up to 1, 2, 3, 4, or we would start off with 5, 6, 7, and that sweep at 8 with the asterisk. And pretty much around 58.11, 58.10 was exactly where the market pivoted overnight on the London low. I had a stop just right here before it quickly turned around, and then we had pretty much a full day of consolidation until that breakdown pretty much confirmed that, there was pretty much confirmed no breakdown or failed breakdown. You can see the market just kind of pivoting off that spot here, and buyers started to accumulate. So once the market really came back up above that daily VPOC here, we see in orange. That's where we saw the market really unwind quickly. Near the end of the day, the book flipped and came right back up to the Friday VPOC from, as you see here, I'm not sure if it's visible on your screen, but basically from 58.50 all the way up to 5900, and then it came right back down here. And that's really just a result of this hitting back into another zone of selling here. So it took us a little while before the market could consolidate again, come back to retest that imbalance that formed from Monday. And then it started channeled up, and as you can see, the market was consolidating for a couple of days. Last week we had some key data points. We'll go through that in a moment here. But basically what happened here was there was a really positive response on the producer prices on Monday, being a lot lower than expected, and that pushed the market to go back up. And technically it had reached that big gap, so technically there's unwinding, but the macro also helped to push prices back up. And then for CPI, it was a bit, as we normally have, choppiness going back and forth to sweep this range until the market consolidated enough. And coincidentally here, there was a really big pivot here. I'm not sure why it's marked here as PD RTH 382, but that's the RTH 382 for Monday. So that was a really key, the golden fib level for Monday. Double bounce off of that, and then we pretty much rocketed right after that all the way up to that 60-60 level up here. You can see didn't quite get to 60-60 yet, but over the last 3 trading sessions we had slow gap up here. And if we go back to this chart here, that's what we marked here at there was a first imbalance at 60.005 and come down, and then there was this residual imbalance up here to 60.60. So what precipitated all that move that went pretty quickly? Some of you may have got caught off surprised by these gap ups, but mainly it was the CPI PPI data release, and that had a substantial effect to bond prices. Bond yields came down quite a bit because the outlook for inflation just diminished. So people started to close their short positions on bonds, they started to buy bonds, closing closing their shorts, and as a result, the 2-year and the 10-year both came down quite a bit. Now on the right side of this chart is showing the spread between these longer duration 2-year yields, and the middle one is the 2-year. Sorry, the 10-year on the left, 2-year in the middle. On the right, it's 10 to -2, and that spread's been going up quite a bit since that November FOMC, and just kind of going up as the market's seeing that inflation is still persistent. In fact, going up in some places for services data. But you can see from the Fibs that I put on that monthly scale, we reached quite a bit of an expansion point where at this point, bonds were quite oversold. So this is helping us to push yields back down. So in terms of volatility, you can see we had those big spikes during that initial sell-off. So this is that big sell-off we had in December 18th, and I'll show that chart here. This is a chart at the bottom for NQ. So after that day of the sell-off, and there's continuation here of selling throughout that week. VIX kind of pumped a few times, going up as the market prepared for a bigger, sell-off below that November 5th gap. But it wasn't quite elevated. I mean, it's relatively low relative to the last 2 or 3 months. So there was not a lot of panic. So this is indicative of just stops getting triggered and not real selling, panic selling, let's say. And you can see at the last 2 days after the PPI day, we really had not a lot of high volatility there. So we've had a gradual climb back up. And the data that came out, PPI on Tuesday, it was quite low from the prior month, 0.2 versus the previous month. The month over month was 0.4, and the core inflation rate was also lower than the previous month, so reaching about the consensus forecast. So that was kind of bullish. There was some concern if this would continue to rise a lot higher. And then on Thursday, the retail sales numbers came out and it was really low. So that's supportive of slowing down the pace at which prices may be going up. So what can we expect going ahead next week? So let's look at what's coming up next week and how that may affect the range that we look at. We can look at the Fibs and we can look at the volume, the market structure, and we can also look at GEX offline to see what the options market is implying here. But next week and the week after, that's really when earnings come into play here. So we're really going to have a lot more gaps, a lot more of a stronger rally if things all line up on the bullish side. And then if we do have some surprises, we have some really poor earnings, that may bring us back into this weekly range that we've been trading in. There was a lot of gap ups because of the CPI that we may pull back down to. So this is going to be quite important the next couple of days. Tomorrow, I think Tuesday, we have Netflix. We have Procter & Gamble, Intuitive Surgical, GE, Texas Instruments, and then later in the week, American Express. So those are all pretty important reports because they will give us a lens on the rest of those sectors. And those all are over 200 billion cap size. So they have, in one way or another, quite a bit of impact to the indices. So you can prepare yourself for those pre-market moves that may be larger than usual, and also post-market. But then the big week is on February 6th when all the big guys come out. So the week ahead for the U.S. economic data, there's not a lot here just highlighted on TradingView. The big ones, we have the Canadian inflation rate, which is probably a bigger deal for us in Canada. Not so much. We have home sales on Friday, and then tomorrow the big thing for the U.S. guys, the Americans, is the inauguration day. President Donald Trump's getting sworn in there. So not a whole lot of volatility expected. We have the jobless claims, which is probably the biggest piece on Thursday. So if we do have a trend today or tonight, it may last for a couple of days, unless the inflation rate from Canada is a big surprise, because there's nothing really to keep that volatility from ramping up, to push that volatility up. So we're just going to have a slow and steady trend if one develops until we have the jobless claims data. So let's take a look quickly now at the volume profile. I'm not sure why it's cut off here, so I can jump into TradingView later. But this is the This here on the left is a box that I drew for the weekly ranges. Kind of cut off because what I'm just looking at is the Friday range here. So we have this profile up here, and then we have a couple of days which we traded a bit lower. That's Wednesday and Thursday, and then below that on the very left is that Tuesday range. So there's kind of a big step or staircase that happened here. We went from Tuesday, jumped up to that middle zone in that Wednesday and Thursday range, and then all of a sudden we gapped up on Friday on that big squeeze overnight. So what happened here was this left quite a bit of a thin stretcher in between all these staircases. I guess you can see between 58.98 and up all the way up to pretty much where the bottom of this wick is here, 59.60. It's super thin. It's like that's just one big move for the CPI. And then on Friday there was another small move up here from the weekly VPOC when the price scooted up past this blue line here. That was the previous weekly VPOC, or the one from the prior week, and then that just basically caused a squeeze once all the stops got hit, and that caused a little gap right here. So around 60.004 down to 59.90ish. So I can put that on my charts. We'll follow those two gaps. Those are the really big gaps to look at here. The really big ones right here. We'll go into that in a little more detail here. We'll mark that because that might tell us whether or not the market continues to go down to fulfill or to fill out the rest of this profile, or whether or not there's quite a bit of bullish activity, and then we may just continue to bounce higher. So on this chart here, I'm showing basically that CPI gap. I'm showing the technical pivot area. Basically, that's the half fib or 382, where we often see buyers step back in because of technical traders coming in at that range. And then we have two naked daily VPOCs. We have the one from I believe that's Wednesday, and then we have the one up here from Friday. Sorry, no, the bottom one's Tuesday. And just zooming out just a little bit more here, we can see, yeah, that's the Friday one. We have the one right here from before the CPI. So that's a big range already. That's 60.41 all the way down to 58.95. There's a lot of numbers tagged here, but basically that's that chunk that we should look at here to here. A lot of gaps in between. So if the market remains a bit neutral or not so bullish to break out right away, then we probably most often would come back to fill us out through the rest of the week. So maybe by Friday we get down to this VPOC. Now, if the market's very bearish, then all of a sudden for some whatever news, then we might come right back below the CPI readout day down to sweep that bottom range from Monday and Tuesday last week. That's unlikely to happen right away. There's once the market starts to fill its gap, it's going to come right back up to fill up the sellers that came in. So for now, this bottom cluster, I guess if you treat this as 3 layers here, the bottom layer cake here is probably going to be safe for a long while. So I don't expect the price to come down below 5,900 quite easily until we've filled out the zone up here. And most likely here we'll see buyers step in, like a lot of buyers come in, because this is such a thin area. It will take a while to break below that. So if the price comes down to this spot, it will lose momentum on the sell side, and we'll see this kind of reverse right back up. So I drew a bunch of arrows here. I always say these push up from discount. So if it comes down to that 59.30 to the 59.90 area, that might be a great spot for a swing for the rest of this week, assuming this gap holds support. And then looking up top here, we can drill down there. We have a few one-day VPOCs, and that's from way back in late December. I'm not sure if that's on my next plot here or not. Maybe not, but this shows it here on the SPX levels. So it might be confusing to throw on SPX, but I'm just showing that same idea here where we have a triple layer cake, or 3 layers here, 3 different profiles. We have that Monday and Tuesday consolidation before CPI. Then we had a big gap up on CPI, and then a little bit more consolidation Wednesday and Thursday before that final pop up to these VPOCs up here. So these orange lines are daily VPOCs. That's the one up here from December 6th before that reversal, before it hit the premium, inside premium. And the same thing here. There was another inside premium from that prior week to reversed. So there's one more open VPOC or one more naked VPOC that hasn't been filled. So, and that's a big gap right here. You can see, I don't know if my cursor is showing up. That's a big gap right there. Same gap that I identified on the ES chart. And then that really top here, that's sort of the all-time high area. So that would require a lot of buying to push into that area, because the sellers may be, the shorts that came in there may be supporting or protecting themselves for a bit there. So you can see on this SPX chart, we have a gap here, and then we have the CPI gap. So there's two main gaps to monitor this week, as well as the gap up top here. It's quite gappy. So we might see more of this elevator up and down kind of business for a little while, especially we have earnings this week. Those will have a tremendous impact. So on this page here, I'll put this PDF on our Discord. For this one on the Discord, you can join our Discord, sign up for free, subscribe. The link will be posted as well on the description. So basically I have here are those levels identified for those weekly VPOCs and those imbalances. So we have the one days at 6100 and 6134 above. That's quite high up. And then we have the ones that we surpassed this week at 59.91, 59.78, 58.95. And I put the ones in bold probably because those will be the ones that we are most likely to visit this week. And on the weekly side, we have a really key weekly VPOC 61.36. That's sort of the all-time high area. And then the 60.21 is the area that we've kind of stayed above on Friday. So those two are very key values as well, and we should see a very strong reaction at those spots. So if I go further here, now I'm just digging a bit into the daily range to help inform us about how fast the price will move from a day-to-day standpoint. So if you're not following my charts regularly, I essentially look at the regular trading session hours, or basically the daily range for the RTH 930 to 4, because often or not the market will only deviate so far from that range. So what I have here is a purple box and a blue and a green box for the minus 0.618 fib and the 1.618 fib, and I'm just curious to see where those line up relative to the market structure, where there are balances. The minus 0.618 lines up with that VPOC from Thursday, coincidentally. You can see that orange line right here. So that's about 59.90. And above that, it's mostly buyer deltas. You can see there's a gap here. And not a lot of trading that was done in this space here, or not a lot of auction. And then way up here, that gap is just below where I mentioned the gap from the beginning of December. Sorry, December 6th. So we have a gap here that we might see fill up. So in my charts, I have marked here B12 and 6.7. The B's I always mark as a very pivotal area where if the market price comes below it, then we should see it extend to the first couple of digits here. In this case, I think if B breaks, we should come down to 1 fairly, very quickly. And then probably at each of these numbers, we'll see a bounce. So at 1, you should see a bounce at 6004 or 6005. And the way I would trade it is I would take a short from B to 1, close it, take the long from 1, push up, and then that one will depend on local structure to depend how long we hold it. It could pretty much be the low for the day too, and it can go all the way up to that 7. Otherwise, then 2 would be the most obvious spot where we would have a daily low. So most often daily low will be in that green box. Now I've also put 3, 4, 5 here on the right in the event there is some really bearish activity. It's very unlikely for it to break down all the way to that CPI gap right away, but it's not impossible. So 3 would be a minus 1.272 fib, but that is also about where we have the last residual imbalance from that gap up day on Wednesday. So you can see we had the big W, and then that bottom was tested a couple of times. It was tested twice on that day. Then it was tested at the end of the day on Thursday. So it might be I have it here, projected strong pivot, internal midpoint. So from a technical perspective with Fibs, it's a very strong pivot because it's been tested a couple times, but also it's quite thin in structure here. So there's not a lot to sweep except for just filling the gap essentially. So if you go forward, let's look at 6, 7, 8 here. I'm not sure if that's my next page. Yeah, so 6, 7, 8 is quite interesting. If we get above that VPOC from Friday, which is about 60.43 in this thick orange line, then that's quite bullish. We may see price advance fairly quickly. So typically when the market goes above the 764 fib, sorry, for the daily, that's really when we see sellers close out their last positions, and around the 118 is really where all the stops get triggered. And on my chart here, I have a little 10 in the middle. That's still a spot where there were a lot of seller imbalances from way back a couple of weeks ago. So that's just going to be a domino effect, all the stops getting pushed up. So if we see price go above this orange line, which is about 60.43, and particularly above that A, which is 60.50, we should see a squeeze right up to 6 initially, where this green line is. And I'll just pop open trading view here. So this is the same chart in trading view. And I'm just going to scroll to the left, as we always say. You can see here I have the periodic volume profile showing us the imbalances. So if you don't know what that is, I'll just pop that open here. That's the PVP, and I'm looking at volume, delta volume. And in purple, that's the down volumes. So a lot of sellers came in here on that reversal for December 6th. And if you're not sure what happened there, basically that was the 1414 expansion of that week, right? Or sorry, 12. Is that right? Yeah, 1212. And then if we look at the full week here, that's 882. So just a technical pivot area. And then the sellers protected that. So right now you can see a lot of balance here, but then there were some trap buyers at the top. And then above that, from the December Boxing Day sell-off here, there's still a lot of selling. There was a lot of selling that printed here. We have to look at the order books and the options chain to see if there's a lot of open interest there. But this, all the historical volume up here is mostly sellers. So if we get above that 60.50, watch out, we might see this go all the way up here. So we might have another 50-point move. Maybe not tomorrow, but some point if that happens, just keep an eye out for that. So I have an A set up for that. I already have a bunch of arrows. But on all my charts, you'll see the A level around here. 60.50 is a really key breakout area. And I would trade it up to 6 first, because technically there will be a pivot at 60.62 or 60.61. Then you can watch for it to go up again. So I'll have those chart links posted as well. And then above that 60.99, if it does go higher, then we go into these all-time high areas, which may or may not be reached this week. So you can watch for that 60.99 reaction. Above 60.99 it's very, very bullish, and then the market is probably not going to be able to sell it or slow it down until it gets above 61.35 here, that orange box. So this is my weekly volume profile with the fibs overlaid, and then with the daily range, just to give us an idea what might happen tomorrow. And for every day, I'll draw this chart with this blue box. We can revisit it every day, and it's a reference point. If it's useful, you can see I have it here on the 5-minute, 15-minute. It looks quite busy, but it's quite informative for knowing where the pivots will come in play. So let's go back to the chart here. Oop, nothing else. Yep. So in a nutshell, look for 60. Look for the reaction around 60.20 tomorrow. If it goes up below that, then 60.004 will be the next spot to take a long. And the really good long would be to wait for 59.90 tomorrow, or 59.95 area. And then I guess we'll see how the market opens up in Globex, but a gap up would continue to squeeze right up to that 60-60 level. So that's about it. I haven't dug into the GEX, the gamma exposures, too much on these weekly plans. The main point of this video is to help you understand the market structure a bit better for the week, look at where the high volume nodes are, and then apply just daily fibs to understand very precisely where the market will pivot. And hopefully that will be useful for you to gauge entries for the week. And just going back to last week here, maybe last week's chart real quick. This was our plan last week. My plan was to hit up all these, or just follow the market to all these numbers, 5, 6, 7, 8, and then when it would turn around, 1, 2, 3, 4, 5. On this chart, it doesn't show it, but I have 5, 6, 7, 8, 9, 10 as well. So we didn't get right up to 10, which is 60, 60. Let me see, I have that chart in TradingView. No. Yeah, this one here. So this is our weekly 1 hour. This was the chart, and it's quite busy, so I don't always post it. But for my own trading, I'll track it some way or another in this fashion. So here we had the breakdown here, and once the breakdown here, the B level hit, pretty much held the short down all the way to 8 here. So 4, 5, 6, 7, 8. Didn't hit 8, which would be that midpoint right here. We thought it could go down to 58.04, and then we had this big W. And then once that big W formed, that's when we were long from 58.12 was when I posted that long in our channel. So basically the bottom of the week we were in, and we took that long throughout the whole week. So that was a nice week where we just compounded our gains. Basically went back up, reversed all of 4, 5, 6, 7, 8, and then we started with the 1, 2, 3, 4, 5, 6, 7, 8. So these ones here, you have to watch for a pivot at every blue box. If we don't see one, then you just continue to gap up. So for instance, here at 2, there was a big pivot for that day, and then at 5, there was a big pivot for that day. But for the rest, you could just go from 7 to 8 and then hold that. Same thing for 3, just enter long when it was surpassing 3, and then hold that to 4. If it's still going, hold it to 5. That's it for today. I'll post this set of notes and the levels in our channels. The link for the Discords and the YouTube channel, if you don't know about it, it's free to join. There's a lot of good futures traders there helping each other. And hit the like and subscribe. Thanks, guys. Have a good day.